Tesla is facing a significant sales downturn, dropping 23% in November 2025, despite efforts to attract consumers through cheaper Model Y and Model 3 variants.
Tesla just reported a record sales plunge. Sales of its electric vehicles fell more than 18% in the last 3 months. Its stock is down 17% for the year so far. Investors are hoping that Elon Musk will refocus on his company and revive Tesla after leaving the administration.
This stark decline highlights the ongoing struggle for Tesla to maintain its market dominance amid these challenges. Previously lauded for its premium cars, Tesla's recent strategies have not gone as planned.
It is interesting to see that Tesla has dropped their price not once but twice now in the last couple of months. In January they dropped, and then again just recently. And in effect, what they've done is drop prices by over 20%. Okay? That's a lot when you're talking about a lot of money for a car, because they're premium price. So
reduced prices appear to have diluted its brand's luxury image rather than boosted sales significantly.
You can see that they're doing something with their pricing. And so my question always is, why and why now?
This segment sets the stage for understanding how such strategic moves and their repercussions are contributing to Tesla's current predicament in the ever-evolving electric vehicle market. A primary aim of reducing prices was to capture a broader customer base and counter declining government incentives. However, this tactic comes with significant challenges. By introducing more affordable versions of the Model Y and Model 3, Tesla hoped to maintain momentum in a changing landscape. Yet, these moves may have inadvertently altered perceptions. The once exclusive brand, synonymous with innovation and luxury, now seems more accessible but less prestigious in the eyes of some consumers. The underlying question remains: did Tesla underestimate the importance of brand exclusivity in its strategy? Pricing down to boost sales has a double-edged effect. While it increases access, it can diminish aspirational value. Moreover, these models, often regarded as stripped-down versions compared to their predecessors, have not significantly boosted overall sales as expected. Consumers accustomed to Tesla's high standards are hesitant. The perception that Tesla is diluting its quality for affordability is not lost in this era where brand identity is crucial. This shift occurs at a time when the EV market is becoming intensely competitive. Competitors like BYD and other manufacturers from Europe and Asia are also pushing forward with competitive pricing and innovation.
Every product, every innovation, every technological breakthrough. At BYD, we love challenges that fuel us and humble us in a constant positive motion. And at BYD, the leaders have a clear vision, authentic inspiration.
Tesla's price cuts appear more as a reactive strategy rather than a carefully orchestrated plan to balance market share with cutting-edge leadership.
BYD is now bigger than Nissan, bigger than Honda, bigger than Ford. So you've got coming out of China, not just a low-cost EV maker, but an innovative, aggressive, competitive company. And this is what keeps executives in the West up at night.
As government incentives waned, Tesla's pricing strategy reflects a need to fill this gap. Yet, it also reveals the complex balancing act of maintaining an image of luxury while aiming to expand to more economical segments, all set against the broader backdrop of its evolving competitive landscape. Amidst these pricing and strategic challenges, the evolving competitive landscape plays a pivotal role in Tesla's ongoing struggles. Competition in the electric vehicle sector is no longer merely intensifying, it's transforming fundamentally. At the forefront of this change are manufacturers like BYD, based in China, which have rapidly advanced their electric vehicle offerings. These companies have not only closed technological gaps, but have also managed to undercut Tesla significantly on price while providing similar or even superior features. It's a well-orchestrated challenge that has caught the attention of global markets, reshaping consumer choices, especially in regions where price sensitivity aligns with quality expectations. Europe, once seen as a bastion for Tesla's growth, reflects this shifting dynamic. European consumers are increasingly turning towards local brands that have caught up in terms of technology and have deeply embedded themselves into European market preferences. This shift towards local brands has been accelerated by European governments emphasizing decarbonization through policies that favor domestic manufacturers. In the US, Tesla's once clear dominion is facing a multifaceted threat. Traditional US automakers such as General Motors and Ford have made significant strides in expanding their electric vehicle lineups. These domestic rivals are leveraging their deep-rooted brand recognition and loyal customer bases, coupled with new innovations, to erode Tesla's market competitive edge. Additionally, increased consumer advocacy for foreign-made and domestic EV options reflects a broader theme of diversification in buyer preferences. Parallel to Tesla's challenges, automakers worldwide are focusing intensely on technology enhancement. From battery innovations to enhanced driving technology, these advancements are rapidly leveling the playing field. For Tesla, the challenge doesn't just lie in maintaining innovation pace, but also in ensuring that these innovations resonate with evolving consumer expectations. The competition is no longer only about who can produce the coolest cars, it's about who can offer the leading-edge technology at the most competitive price. Tesla, whilst facing these intensified competitive forces, must reevaluate its positioning, especially in regions where its brand was once unequivocally dominant. As rival firms continue to gain traction, Tesla's strategy must adapt to a new era of global EV competition. But the challenge isn't solely external. Tesla must also consider its internal strategy to navigate this competitive landscape effectively. In response to these pressures, Tesla is making notable shifts in its approach to maintain relevance and drive sales. One significant strategy includes aggressive promotions. Tesla is introducing incentives such as 0% financing and strategic discounts to entice buyers in a challenging market. These efforts aim to counteract shrinking market share and revitalize consumer interest, particularly in areas where its competition has made significant headway. Another avenue Tesla is exploring is its full self-driving technology. Although adoption has been limited, it remains a cornerstone of Tesla's innovative brand appeal. Tesla continues to advance its autonomous driving features, viewing them as a differentiator in the market. However, the uptake of this technology is still slow, largely due to regulatory hurdles and public skepticism about autonomous vehicles. Furthermore, Tesla is not just focusing on immediate sales tactics. The company is investing in future technologies like robotaxis and artificial intelligence. These investments represent Tesla's long-term vision of redefining urban mobility. They also highlight its commitment to being at the forefront of technological innovation, even as it fine-tunes its current business model to combat immediate challenges. Despite these hurdles, Tesla's financial health remains robust. It continues to maintain profitability and substantial cash reserves. This financial cushion provides a foundation for Tesla to pursue its ambitious goals and adapt its strategies in response to market dynamics. While the road ahead is fraught with challenges, Tesla's commitment to agility and innovation suggests a potential path forward that could redefine its standing in the global EV market.